Hello, and a massive hello to everybody. This is 50 Pips rocking and rolling 18th of April 2016. No trade calls or recommendations or response for their own stuff. We're here for educational purposes only. As always, the fact that you're in here means you've read, you understand, you accept all the disclaimers on the site, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So, video's a little bit late. I didn't want to do one last night. We still had a lot of stuff that had to open. I don't want to get people in trouble trying to chase moves on a very busy open. Now, keep in mind that we've got a lot of stuff to coming this week. It's just the start, right? So you definitely don't want to go all in, crazy man, crazy woman trying to chase gap fills and be down, all in and out of the game before the week starts. So pace yourself, right? Check yourself before you wreck yourself. So keep in mind that today's fairly light, but tomorrow we're going to have monetary policy meetings out of Australia. We've got the ZEW, we've got building permits out of US, we got RBA on deck, we've got Carney speaking, we've got Paulo speaking, Bank of Canada, right? So there's an awful lot of stuff coming in. Also with the GDT price index, Wednesday we've got a lot of claimage count data, earnings out of the UK. We've got crude oil inventories again. On Thursday we've got basically Super Mario on deck, right, with a ECB press conference. We got Philly Fed, and on Friday we got a bunch of data. We got all the PMIs, we got the core CPIs, retail sales out of Canada. So it's going to be a very interesting week, and this is just the lead into next week where we've got FOMC and BOJ, right? So it's going to be very interesting to see what shapes up. Now, what's going on in the chart? So I think there's a couple of interesting things, and really, yen has to be a focus here. Now, if you look at, whether you look at USD JPY or Euro JPY, they're both at fairly interesting levels. This is a monthly chart. You see you've got a lot of confluence coming up here. This is big levels, right? But a big move here, right? Big interesting zone coming up. And if you look at Euro JPY, you see how hard it's holding below these three moving averages, getting sold hard, and it desperately trying to find a bit of a bid here. But anyways, interesting zone. So if you look at Euro JPY, we're probing, right? Trying to take out some new stops, trying to trigger some selling here, try to attract new sellers at lows. Now this is a very interesting zone because I think a lot of people are trying to play some long euro bets, probably rather try and play it against the yen than against the USD. So that would probably make more sense. But the only thing I wanted to mention here is this would be moving very technically very nice, and I'd be very cautious about trying to be stubbornly long as we hold below this area, right? What you want is, even if you're trying to play for a gap fill, I'd much rather wait for this to try and stabilize back above the breakdown zone, showing that the market is unable to attract new sellers at lows, and then try to play for a gap fill, then try to play bounce. But don't get stubborn into these. There's not the kind of day you want to chase flows, especially if it's holding outside of key support or key resistance, okay? If you're looking at USD JPY, right, this is the most interesting chart because we're right back to square one. Remember, we looked at this the other day and we said that the risk reward, as far as we're concerned, was all asymmetric bets, trying to get long on any hold here around the 108, just above the 108 for a move back into the 111s, right? And we're exactly back to where we were last time. So, the more levels get tested, the weaker they tend to get and the higher the chance they break. But it doesn't mean that the asymmetric risk reward profile is no longer there, right? So there's a difference between low percentage odds trades with a not very interesting risk reward, right? Making playing for a 50% setup at 1-to-1 risk reward, and something that pays 1-to-5, 1-to-10, 1-to-15, even though the percentage win rate is much lower on the setup. Net on the strategy, you could be very profitable, right, if that asymmetry is there. So I still think this is one of the most interesting things. A lot of people probably still looking, aggressive longs, still looking for that 107 107.50 to hold, right? That's a very big zone here going into the week. And keep in mind that any stops tight inside this range could be a bit of a sitting ducks, but I think this is fairly interesting. This is the most interesting thing for me, at least, going into the week. Hold of this area, stabilizing above the 108 for a gap fill or a pop. This is the only thing that's interesting to me in terms of gap fills on on the charts today, but we'll still have to see if we stabilize. We have to see through London flows. We'll have to see through New York flows, right? Gold, no change. We talked about all these shorts. No surprise. We've been aggressively short on gold, looking for a retest of that 50 DMA, and that's done and dusted, right? In terms of targets on that setup, primary target is done here into that level, and if we can get some gravy, we're looking for this as being the primary move being back down to 1200, and this would be the gravy train, right? This would be gravy if we get a move all the way back down. So this is in play. We'll have to see. I don't want to go into this through too much detail because we've discussed this a lot. ES, no big change. We're still hovering. We're still in range. We've had a little gap down, nice little gap down. This is another example of why we repeatedly say if you're looking to build swing shorts, we don't believe in, I'll get short once it goes down, unless you're holding some kind of short exposure. When these gets going, it's very tricky to jump on the train because the risk reward profile is really not that interesting. So if you were building shorts last week, you woke up to a nice surprise, you need to take some back, take some off, and then reassess. But basically, without going into too much detail here, we really haven't changed. We're still inside the range. Go back at all the other previous outlooks. We've discussed the ES in detail. 2100 top side, 2050 mid, 2000 low end of the range. GPB USD, a lot of people keep on asking about it. We're not too interested as far as we're concerned. There's a base here, but a lot of Brexit risk. This is a lot of velocity of move inside range. We would expect it to stay anchored around here unless we get something detailed out of Brexit, and we don't feel there's an awful lot of edge here unless you're trying to play tactically intraday, but not something we're too enamored with, okay? CAD, what's going on CAD? It's really all about that 129. We've discussed that in detail. We believe that is the bull bear line. As long as we get daily closes below, we could see this trading with a heavy tone for a move back into the 125s, but as long as we trade above, we would suspect the path of least resistance to try and come back into this confluence zone of these moving averages, this 135 area. So we still feel there's more upside here, especially if we can hold above the 129. Euro USD, no big change. We're still stuck here. We talked about these repeated failures at highs, and our outlook hasn't changed. We were looking for a move back to tag the 112, so this hasn't changed. As far as we're going into the week, the pivotal levels to watch here, as long as we hold outside below this Friday range here, our assumptions haven't changed. We're still looking for 112s, 112 to be pivotal for a move higher or for the rotation back into 1050, which is the lower end of this range. Keep in mind that if we're still coming down, this is still attempting an upside rotation. But again, you can look at the previous videos. We haven't really changed our outlook on Euro. Aussie, again, we talked about the fact that we still feel the plays are to the downside, especially into the RBA, and very tricky here. Nothing too interesting unless you're being aggressive in terms of setups shaping up here. This is a big pivotal level. Keep an eye on the daily close here. Keep in mind the RBA, etc. But a hold below here, we could see more acceleration lower, and we would be looking for a move all the way back down into these 75.20s, right? This is quite interesting. If you look at it going into last week, you see that it repeatedly tried to break higher, but it couldn't get any traction at highs. So it was interesting action, but far from being an AAA setup as far as we're concerned. But you see here, even if you're looking at the 4-hour setup, you've got a lot of interesting support coming in here, but it's all about that bull bear line on the daily, really. Crude, smack in range. We discussed this in detail last week. We said as far as we're concerned, the opportunities were to get tactically short into this level or potentially look to try and get long back into these lows, but we were stuck inside this range. We feel that pretty much, if you're thinking about Saudis or OPEC, etc., people will be fairly comfortable with crude trading inside this range. So unless something major happens, we don't really see why we should have a very aggressive move outside. So as far as we're concerned, inside this range, this is much to do about nothing. Velocity of move inside range, very whippy, not an awful lot of edge to position longer term, only short term trades. Kiwi, still stuck inside this area. Keep in mind RB and Z. Our outlook hasn't changed. As long as this high range holds, our expectation is that we move back down and tag the bottom side of the range. We come into this confluence zone of the low end of the range, and these moving averages, reminder, moving average 50, 100, and 200, all simple DMAs, nothing special, nothing fancy. What else have we got here? And USD CHF, last but definitely not least, a fairly interesting zone here. It's holding up very well. Keep in mind that this is a very interesting level, bull bear line. We've also got these previous lows here. We'll have to see how we behave, but if we start to catch some bids, and if we continue to hold a bit heavy, right, we expect this to try and rotate all the way back up into that descending trend line. Okay, so guys, wishing you all the best for the week. Thank you so much for all the retweets, for sharing, all the support, all the comments on Twitter. Have an awesome one, and I'll talk to you guys soon. Okay, have an awesome one. Take care. Thanks for listening. Bye bye, guys.